Hey, what's up, everybody? It is Thursday, August 8th. August 8th. If you've been paying attention, that date should ring a bell. Because going all the way back to the end of June, June 26th, and I'll run through the timeline and you can go back and watch the videos. But I said August 8th would be the buy window, the turn window when we resume going back up in the stock market. Now, let's go through the timeline. And remember, this is all based on what I do, uniquely what I do, I should say, which is the examination of these reserve flows, the analysis of these reserve flows. I've done many videos on this. I am the only one who really focuses on this. This is really something you can include this in the MMT understanding, but it is really something unique in my analysis. The other MMT people, not only do they not do it, I think they kind of misunderstand it, okay? But I do it, and as I've said many times, these create very tradable cycles in the market because you're literally having hundreds of billions moving into the banking system, which that affects banks and their asset mix. They have to adjust to that, and we were talking about banks, commercial banks have a total of over 17 trillion in assets, so even small adjustments to that make big impacts on the market. And then you have these flows back out of the banking system when the government either sells bonds or taxation, these regular occurrences monthly. Now, the bond sales have been off the table since March when we hit the debt ceiling, but now they're back on. So there's going to be some consequence as a result of that. Now, my subscribers, I tell them about this. Anyway, the timeline was back on June 26th. I said the market was hitting a reserve trough. Okay, that's a low point in bank reserves. And that is bearish, and I said we would be in for a correction. And I did a number of videos saying the market was churning at that point. It was not making new highs. We had some negative news headlines, the Trump announcing the new tariffs on China, and then the Chinese currency and all that. And that we went down. But I've been saying in these last few videos during that panicky sell-off, you got to buy that. But going back to June 26th, when I said we were peaking out in the market based, and these are short-term things, and it's funny because I'm thinking about making a video about you cannot make money short-term trading. With this particular understanding, you can, because this is kind of like having inside information. Okay, but in general, how most people short-term trade, and I'm going to do a separate video on this, you cannot make money short-term trading. All right, let me just leave it at that for now. I will make a video on it at a later date. On June 26th, at the very same time when I said the market was going to have headwinds because of these reserve shifts, I gave a date. I said August 8th. Now, in some of the early videos back then, I didn't give the exact date on video. I said you got to sign up for a 30-day free trial. I would have given it to you on a 30-day free trial. Some people took advantage of that, and they got it. But lately, in the last couple of weeks, I've been saying August 8th was the reserve peak. And at the reserve peak, we start to see draws, and that creates a bullish environment. I'm not going to get into why. I've explained it in major detail practically every week in my MMT Trader Report. Now again, if you want to educate yourself, if you want to become informed, if you want to elevate or develop mental game, you got to come to me and subscribe to MMT Trader. I don't know what else to tell you. I try to give you as much as I can here, but it's really all in detail with the data and the charts, everything weekly on MMT Trader, and every day really, because I'm sending out tons of emails every day. So we are headed back up. Now, I already know the date of the next market peak. Now you can't be better than August 8th. That happened today. I said this what, more than a month ago, 6 weeks ago. At the same time, I said we would hit a peak in the market and we would have headwinds and difficulty going higher. I even said to my subscribers, take some downside protection. At the same time I said that, I said August 8th we head back up, and now I am telling you I have the next peak in the cycle. I have the date. And it's not like I'm conjuring these things up over a Ouija board or tarot cards or tea leaves or anything. This is information in government publicly released data. All right? If you understand how to read the daily treasury statement, if you understand the concept of these flows, then this is all available information. This is not a secret formula that I have. If you're educated about this, you can do it. But I do all the work for my subscribers and they just go ahead and make money. So, that is what has happened. Now, on the trade war, if we can call it that, not much of a war really if you ask me, but a couple of things. First of all, today, or maybe it was yesterday, I'm not sure, the PBOC, the Bank of China, set the rate at the yuan, the RMB dollar rate above 7 for the first time in 8 years. Wait, I might have that wrong. For the first time, it could be for the first time in 11 years. I'm not sure if they did it last in 2000, if it was at 2011 or 2008. It might have been 2008. So the first time in 11 years, they set the rate, official rate, above 7. Now the other day when the market tanked and the offshore RMB traded above 7, the PBOC still set the rate below 7, kind of like to placate Trump and to say, hey, we're not weaponizing the RMB. But today they set the official rate above 7. And what happened? Market was up 370 points, all right? If you look at the negative impact, which I went over today and I sent out to my people, if you look at the negative impact from the trade war since Trump started that, and I went back to 2017, that's fair, right? Because Trump actually took office in January 2017. The impact has been a negative 0.3% to the economy. Now, I'm not saying it may not get more than that. It may end up to be, 0.5% by the time he's all done. Because he's going to put another 10% on 300 billion. But the point here is, with all of that and other things, weakness in the energy sector, and of course that has a big impact because the U.S. is the world's largest oil producer. So like when we have that happening here, weakness in the energy sector, it actually produces some drag to GDP. There's less capital investment, etc. The good news is it lowers inflation, and that actually creates higher real GDP. But the overall, there's some negative to that. So the trade war, and I said all this, right? I've been saying all this. If you go back and listen, I've been saying all this all along, that the whole thing was completely overblown. We had 0.3% of GDP shaved off. We could live with that. We could live with that. Because hopefully, and we are starting to see a little bit of evidence that capacity utilization, in other words, how much of our industrial capacity we are using here in the United States, it is up in the Trump presidency vis-a-vis or relative compared to the Obama presidency. So it's not up a lot. We're not talking about a lot, but it's moving in the direction it's supposed to be moving. And who's been saying that all along? I have. Anyway, that's it. So if you want to get the next market peak, all right, because you can't make money short-term trading, but you can when you have this kind of inside information. You got to sign up for my report. go to pitbulleconomics.com, sign up for a 30-day free trial of MMT Trader. I'm the only one who does this. Bye.